Let's see who jumps in first. Just getting the tweet out. $74. We picked up a new subscriber somewhere. Okay, it is streaming. I was skeptical because first thing when I turned on YouTube, it had all sorts of let me show you how to set up a live stream. I was wondering if there's some updates and they changed I don't know, some of the programming, some of the features, some of the things you had to do to actually set one up. But it looks like it's going. We'll find out here in just a moment. Ah, there we go. Paul first in the chat. Power chord, the crowd goes wild. Power chord. Yeah, 74. I don't know. Usually it gives me a notification when I get a new subscriber. And it just, I never got that notification. Oh. Tell you what, dude, it's been a long day. It was still, just normal 8 hours, but it was a long day. Still waiting to see how this plays out. The covered calls from last Friday. Hey, I want to be a rock star. So yeah, I'm gonna go through and I want to kind of, what was last Friday? Can I do this without looking at a calendar? Cassie, welcome to the live stream. 64, but back to winter tomorrow. Oh my God! So yeah, yesterday I was not on the live stream. I had to run out. If anyone who ever looks at a map of Minnesota, I don't know why anyone would, but I'm up on the Iron Range, Virginia Eveleth area, and I got a call yesterday morning. I was only at work. It was about the first 20-30 minutes of the day, and I got the call. I had to go out to Silver Bay and Two Harbors, which they're both right there on Lake Superior. So I get down there and I'm working and I'm sweating to death. I'm like, oh my God, why am I sweating so much? I checked the temperature and it was above freezing. It was like 33 or 34 degrees. I'm like, oh my God, I'm dying. This is it's too hot. I need to cool off. So yeah, it was just above freezing, and I'm like, okay, yeah, I gotta take, I had the snaps on my bibs, but I had to zip the legs up and zip the chest down to let some air in because I was overheating real bad. But yeah, I missed out on the streaming yesterday. Missed out on most of the. On Clay's stream. I got to the earnings report right as Winston Churchill was going off of the air. And by the end of the day, I was so tired. I just wanted to come home and sleep. I just was a very tiring day. Okay, so back. Too much information. Yeah. Either that or you think I'm the masked investor? I'm not the masked investor. Okay, so yeah, the 28 started this week. I want to kind of... God, it's only Wednesday. That's what's wrong. So yeah, looking at it here. So yeah, the covered calls that are showing up on the screen, this is the graphing, everything since those covered calls. Since I got those buzzer beaters right at the end on Friday. So this is from the opening Monday all the way through. And as you can see, it's been flirting with that. It's been flirting with the strike price quite a bit. There's a heating and air conditioner company called TMI. Oh, I did not know that. Now I do. Here's an interesting. Okay, little bit of history. Not like actual history type stuff. I always laugh at the name when the commercial comes on. Yeah, I laugh at that too. Yeah. So the two towns I was in yesterday were Silver Bay and Two Harbors. So little bit of history, a little bit of Lake Superior history. So probably one of the most famous, there are a lot of famous shipwrecks on the Great Lakes, but one of the most famous, if not the most famous, is the Edmund Fitzgerald. And it is odd because the Edmund Fitzgerald's maiden voyage. Now I might get the two towns mixed up. The Edmund Fitzgerald's maiden voyage was, we're just going to say one of the names. It was to Silver Bay, Minnesota. The first trip she made out on the lakes was to Silver Bay, Minnesota. That November, when the Edmund Fitzgerald sunk, there was a second ship that was tailing the Fitzgerald. The Fitzgerald had lost its radar. November storm was rolling in, and the two ships were making the run together to try and make it to Whitefish Bay. I believe that would be Michigan, because it's right there on the Upper Peninsula. So the Fitzgerald lost her radar, and the ship behind her was named the Anderson. And the Anderson was tailing Fitzgerald and using the radar, using their radar to help guide the Fitzgerald. And the funny thing is, that November, when they launched that storm, the Anderson left from Two Harbors. So I just thought it was kind of cool that, because I know I've watched quite a few documentaries on the Edmund Fitzgerald. I know quite a bit, but there was a video a couple months ago that I saw that had said that it was Silver Bay and Two Harbors, and I just thought it was funny because those were the two towns that I was working in yesterday. And oh my God, even with a little bit of ice out there, the lake looked gorgeous yesterday. I should have. I debated on lunch when I was there, popping in for a little ad hoc live stream, but I don't know how to do the live stream on my phone. I've never done it before, so. But yeah, I was debating going on there. Hey, Trapper, how's it going, man? Pop it in for a sec. What is up? What is up is the share count. I was just I was doing a little bit of Great Lakes, Lake Superior history, and we were going over covered calls that I entered on Friday that I actually jumped out of Monday morning before this run-up. Oh, glad to hear everything's going good, Trapper. Yeah, seeing you a bit on Clay Rose. I know you've been in and out on his a bit lately, and questions come up on how Trapper's doing. Clay Rose asked it before, and on here we have some really a lot of people come in here regularly, so was kind of wondering how you were doing. Paul's just trying for it there. Yeah, as you can see though, Paul. So the red line is at 1944. It did tag 1943 there, so the thing was, I had a trading plan, and it was running up. It would have triggered my stop loss. It would, the fact that I recognized it was going to blow through my stop loss, and I got out of it before. I still stand by that early exit because with my stop loss, it would have ran right through, and it would have cost me more money. So the fact that I got out of it before. And as you can see, it's still 1853. It is still flirting with that assignment come Friday. So it'll be interesting to see. There was a good exit point here at 1731, but as I stated, I was holding out for the 1614 because that was my 70% or better capture. Who's Trapper? Man, Trapper's the man. Trapper's the real rock star. Yeah, I am kind of wondering. So we got 2 days left. I'm not, I did pop in on Monday, or was it? No, it was yesterday, Tuesday. I did pop in yesterday and managed to get some cheeky covered calls. Got them right after market open, and got out of them. Oh, we're on the 5 minute. Okay, that's what was throwing me off. Yeah, got in on them super early, and immediately when it ran down and all these red candles, I was waiting for that super long downward run. Like when we went over this on Monday and I exited, I said that I was looking for that nice gradual run down. I went super aggressive when I saw the price spike up because I knew there's a high probability that it was going to run back down, and that I would be able to close them out like super quick. So yeah, I actually closed out as soon as I saw it turn green. In fact, let's go in 1 minute. Where are we at? Where are we at? March 1st. We want March 1st. We want here. So yeah, let me go in and check real quick, because I got them as soon as it was spiking up. I think my entry. I think it was at 35. I did not top ticket. It is so hard to top. You always hear people, "Oh, I got the perfect trade. I got the perfect trade." No, I don't get perfect trades. I get good trades, but I don't get perfect trades. So yeah, I ended up in this candle right here at 35 was my entry, and I got out at 53. So yeah, 53 would be this candle, and I went aggressive enough to where I was able to jump in and captured enough profits quick enough with all the volatility that was in there. I covered my losses from selling on Monday from the Friday options, and I was still able to pick up just shy of 20 shares on Tuesday during the dip, which at this same zone, I think 1865 I think was my fill. So I was somewhere, yeah, I was in this region right here when it started to turn and go back up. Probably, no, couldn't, might have been that candle. It was one of these two. What was it? Yeah, it was this candle here. Does anyone have the clip button? I don't. Yeah, I'm not sure. I'll see if I've got a clip button on there. Cassie, dinner's ready. Smash the like button. Hey, thanks for coming in, Cassie. Thanks for smashing that like button. Hey, DD214. What up? Came in for a bit to say hi. Well, hi back to you. Cassie, see you later. Good night. No clip button on this one. I think it kicks in after a certain number of subscribers. Yeah, Cassie, that might be part of like the monetization thing. Same thing where I gotta have 1,000 subs. Paul says DD. Are you talking due diligence? Yeah, but Cassie, have a good evening. We're just gonna be hanging out a bit. Not sure how long we're gonna run the stream tonight. Kind of was wondering what everyone is thinking. You know, tomorrow is the big March 3rd date. Everyone talking about March 3rd, and yeah, March 3rd. March 3rd is the day after March 2nd and before March 4th. I don't know what is special about it. It is a Thursday. It's not even the end of the week where, where options are going to be expiring and everyone's battling to close out the week. I don't know. Who was it? Lou that made the prediction or had said that if we don't MOAS by March 3rd, it's not going to happen. Well, the thing is, the MOAS is still on. They have to cover their short positions. So for a deadline to get put out there that if it doesn't MOAS before this date, it's not going to happen. Well, no, their position is still short. They still have to cover. My prediction is, there's no super strong catalyst that is going to cause it. I know they're talking about a ruling being passed. I don't think that the ruling is not going to force them to go cover their positions. It's not. There's not a ruling that says if you have a short position over 60 days old, over 30 days old, you have to close. You cannot have a short position open longer than 30 days. There's no rule like that. So there's nothing forcing them to exit their position. It is still, the game has not changed. This ruling is not going to change. It's not going to change their standpoint, and hopefully it doesn't change the ape community. Yeah, Trapper saying he doesn't think anything's going to happen either. Yeah, I don't. There's no catalyst for this. It makes for great headlines. It makes for that great clickbait title. But yeah, I don't see. I see market trading going on as usual, and we're still waiting. Still waiting on the risk to get to the point where they're forced to cover. And that's a lot of it does come down to what is the risk for the hedge funds? Yeah, there we go. We got all of our little colors of lines right there. We can see the red, yellow, green. Yeah, but God, I was just so hoping it would have ran down and tagged that 1614 rather than running back up. Had it started down and I saw buying pressure stepping in, I might have exited before that. But the fact is that when it turned and started running upward, the risk was too high, and I knew the stop loss was going to trigger. Yeah, too much money for them to lose. What's it supposed to? What just Citadel alone has. Now keep in mind, when they report, I've seen a lot of people tossing around on Twitter the Citadel report where it shows that the $65 billion in short positions, that is not all AMC, that is not AMC and GameStop. That is, to the best of my knowledge, that is total in all the positions that they're short in across the entire market. So that $65 billion, that's not all AMC. That's not AMC and GameStop. That's just everything they're short on. It's just like, when you open up your brokerage and you see your P&L. You see the screen that shows where you're sitting at. It doesn't open right up to show where your AMC position is. It shows you, overall how your entire portfolio looks. Well, that is a look at, their entire portfolio worth of short positions. So again, people saying that 65 billion, yeah, that's AMC right there. Okay, well, you got to remember that GameStop was here before AMC. I learned anything involving money, expect the unexpected. Yeah, that's do I hope we mow ass tomorrow? Well, of course I do. That's why we're here. PROG. PROG. PROG is in the upper window. Now I'm actually looking for a re-entry point on PROG. I did get a little cheeky. I went in. I think it was Monday. I went in on PROG. I believe it was Monday. It was after market. In fact, I went and played around with limit orders with some of my shares. I did it in 100 share blocks, and I went in. So PROG after market was sitting at that 135 mark. Now, if you see, we got my average on here, and we've got the sell and we've got the buy for when for if you're looking to do swing trading on it. Trying to find a rhythmic swing trade. So that is the whole thing. I've got the 3 zone set up from $1 to $1.10, $1.10 to $1.35. So I got cheeky and I dropped in limit orders for 100 shares at $1.36, $1.37, $1.38. I was watching. The share price did not move, but at some point, all 3 orders triggered. And I swear I did not see the share price move. So somebody out there, they were looking at it, and they were playing the bid-ask game, and they decided they saw my price, saw 100 share blocks. So I'm waiting for re-entry. I'm looking to see if we get back down in 120, 115. I'd love 110. I would definitely, that's why that's set up. The 110 to $1, that is the entry. That is the place I want to buy in. Granted, last time I bought in at 127. But yeah, I was feeling froggy, and I'm like, let's just go ahead. Let's set some limit orders and see if they actually go. And of course, they were all. Granted, my average is $1.61, but if you go off all the shares that I just picked up for $1.27, granted, I know it's not. It's first in, first out, so I know that the shares that were getting sold were actually the shares that I bought in. In the $2.50 to $3 range. So I know overall I took a loss on those. If I get back in, I know because of the wash rule, I can't use those for a write-off. I'm not worried about it. It's all the long game. So I'm not worried about wash rule on PROG stock, when at most I'm looking at the math isn't even worth doing. Granted, it's a loss, but it's you only get so much of your capital, so much of a write-off for capital loss, capital gains for all that. So it's not going to make a difference in the long run against the rest of my portfolio, because doing adding everything in, I hate taxes. So how's everyone else doing tonight? How did GameStop do that? GameStop's looking good today. GameStop's looking good. SPY was looking great today. Hope no one wasn't. Hope no one was playing the VIX. Yeah, that is a little bit of hair in the face. Ever since that gap down on the 24th, that run up, oh my God, that the calls that were printing there. Why do I have a 452 mark on the SPY? This intrigues me. I almost wonder if someone was asking about the SPY. I'm thinking it has to be dealing with this zone right in here. From the 20th, yeah, beginning of December, had a run up, came back down on the 20th and bounced back up. I'm almost wondering if it was related to that, or it might have been when it fell and broke through. The days all blend together. Interesting. Oh, we don't need that line anymore. Yeah, SPY's just been looking crazy lately. Alright, let's go. Can I expand this out just to go from November? The reason why I'm going just from November, if, it was the end of November when we started to see the pullback in force in the market. Nope, can't fit it all. There we go. November through now. So SPY, we're going to pop in, check on the Qs. That doesn't look as... Oh yeah, just exaggerated a little bit there. And the Russell... Oh. WM, not MW. Kind of got myself a little bit there. Yeah, the Russell, compared to the others, just has not been... Granted, when you consider that the S&P 500 and the Nasdaq, those are powerhouse stocks in there, and you compare it to the Russell 2000, and you would expect it when the entire market's getting beat down, the smaller guys might take it a little bit worse. And there's AMC since the last earnings, in fact. Yeah, November 8th was the last earnings. Everything was going pretty good, and then we got to the end of November. Actually, the week before November is right in here. Can't wait till we get back to those levels. All right, let's get back into current events here. Talking about some crazy candles here, those two. All right, back in 1 minute. So yeah, I'm still liking. I'm still kicking around the idea of a third set of covered calls for this Friday. Because pretty much, I had the losing ones that I exited on Monday, and then Tuesday I had another. I had a winning set on Wednesday or on Tuesday. Now I'm wanting for Thursday. If we see a little bit of volatility early in the market and see a run up, if we tag 1950, I'd be tempted maybe to try a third set at 20 or 2050, one of the two. All depends on when in the day it happens, how the volatility is, where it is in the theta scale. Because if you look at it right now, those 20s, they're losing almost $14 a day worth of value. So to get in on those, it needs an early run up to bring the premium higher, and the theta is just going to keep ramping up going into Friday. So it's potentially I could do a third set. Grant, I could sit there and flip these all day long. Hey, Riptide, welcome, man. Welcome to the live stream. Yeah, I'm glad you caught me too. So yeah, tomorrow being March 3rd, and the predictions out there, and I think if we, there's always a potential that they're right, and it could start ripping tomorrow. So I think I would like it to start running, but if I were to get in, I would have to see selling pressure step in. I would actually have to see the hedge funds fighting back to know that it's off. Because if it starts ripping and everyone gets excited and it starts screaming, lose right, Lou nailed it, and the FOMO kicks in, yeah, it could artificially trigger, it could trigger the MOS. It is possible. Anything is possible. But if it runs up and starts to run out of gas, and you start to see attempts go, you get your get a double test to the top and it's pulling back off there, or if you see a roll and buy a roll, that's actually pretty good. That's a pretty good example. Let me see if I can find a better one there. Yeah, we are on the 1 minute, so let's go ahead. I don't want to scroll too far back, but this might be a little. So this is a little spiky, little chaotic. But if you see it coming up, and let's go off the moving average here, off the 5 MA on. So you see how the 5 MA out goes up, hits the top, and then starts slowly rolling before it goes back down. If I were to see, if it runs up and you see it start to taper off at the top, because this was a nice steep run up, and it starts to taper, starts going sideways just a bit, little bit of up and down in there, and then it starts to roll. If I saw it right there, that would be the mark that chances are that it is going to be starting a pullback there. And it is a gamble. It is not, none of the technical, there's no such thing as perfect technical analysis. But if I saw that at about the midpoint through the day, and it hadn't started with that early break and kept running, a roll like that might tell me that it's time to enter in. The only problem is I'd be fighting theta at that point. So if we go in, currently it is at 24. Theta's at 13.5. We'll call it 14. Halfway through the day, this is already going to lose $7. At that point, it's already down to a $17 contract. How much of how much of an influence, how much does the delta and gamma kick in as it's starting that run up before it starts going on the roll to pull back. And that those are really, when I'm looking to day trade options, when I'm looking to see, where's my entry, where's my exit. If I see a roll start going like that after a nice long climb, and it tapers off and starts to roll, usually I would look at that as, for me, being a safer bet, as it's going to be starting a pullback. So I'd be trying to get in as the pullback is starting, and look to not get greedy, because I know a little bit of a pullback can turn into a bounce. With the expected date, I always expect the opposite. No high hopes, but all welcome if it happens. Yeah, definitely, Riptide. That's if you scroll up, you see Paul said, if anything involving money, expect the unexpected. I don't expect it to happen. So I will continue to play it like I always play it. I will look for those huge volatility spikes in the first 15 to 30 minutes. If they go my way initially, I look to get in, and I look for it to run against that direction fairly quickly, because that first 15 to 30 minutes, yeah, it can it can spike up, and then it can snap and pull right down. Anyone who watches the market at open has seen it, and gets upset. Why is it crashing? Well, why is it getting hit so hard? That's the first half hour of the market. That's just the way it is. Still holding PROG calls. Well, Riptide, the good thing for you on those PROG calls, close that, April 1st, $1.50. So the good news is your theta is still low, because today for PROG it was a theta burn day. There, for the most part, the white mark, it closed where it opened. That is what is known as a theta burn. Literally, the calls just lost the value of the theta. Now they may have volatility may have changed. I've never really understood Vega. It's up there because when I was setting the screen up, it just happened to be next to theta. So I never got really big into Vega. I know the volatility does affect the prices, but you can look at the implied volatility and kind of get the same feeling on where it's moving. It's just it's not a mathematical tangible that you can calculate in. Well, these days, as Clay's official options expert, I probably should, take a look at the lesser Greeks and get to know them a little bit better. But for how I trade and how I like to show people, a lot of it does come down to delta, gamma, theta. Those are your three key Greeks. Those are 90% of your pricing is going to be off of those. And I don't know if you were in here, Paul, or not Paul, Riptide. I did mention that. Oh yeah, no problem, Riptide. Good having you stop by. Always love everyone coming by, just spending a little bit of time out of the evening, and I greatly appreciate it. Yep. Have a good one, and we'll catch you later. Where are we? Okay, yeah, that's still the day. Yeah, in fact, I think today, if we go back to the start of the covered calls, which would have been the 28th. or pretty much at the end of the 25th. But like I said, those were buzzer beaters. No, scroll over. There we go. Yeah, looking at it, had I held those, 1730 was still going to be the best exit point. So yeah, I am generally interested in seeing how that trade, had I not exited it, had I not had a stop loss, had I not executed before the stop loss, I'm interested to see where I would have been at on close. Granted, even if it closed out at 1851 and I lost my shares, I could have ran back out and repurchased those shares and bank that $94. $94 per contract. That was nothing to shrug at. I just it might have started off and ended up in a really huge run, but with the stop loss, it would have triggered anyway. So what's everyone else up to this evening? If I had to guess, I would say it is Paul who is still in here. Oh, that's it. So yeah, I am kicking around doing another set of covered calls for this Friday. Just having that trade not work out, it leaves a sour taste in the mouth. It's like, okay, I want to attack. Hey, yep, yeah, there's Paul. Now, bull puts. Start looking towards next week. 1650s. I like these at $12 a contract. Back on the 24th. We did pull back a little bit. $15.50 16s. Losing $4 per contract though, but it's a 50-cent more buffer. Let's go on the single on the puts, see where we've got. $17 is still a hard point on puts right now. Oh, 19, but those are already in the money. That is next week. How do the call? So 19 and 17. Oh no. Nothing really defined here yet. Those 19 and 20s on calls for next week. Those are like stacked up on each other. I got your back. When you get to the next YouTube level, take me with you. And if I get there first, I'll take. Yeah, definitely. That's So anyone watching this on playback, anyone who comes back through and views this later on, if you have not subscribed to Paul Wright Lawns yet, you need to go over there. That's and that's right with a WRIGHT. Yeah, you got to go over, subscribe to his channel. It is a fun, chill place. Even throughout my workday, I like logging on to Paul's channel and just rolling with him while he goes out and does snow removal. He's also, if you have questions about crypto mining, definitely talk to Paul as far as building mining rigs, lawn care, snow removal, outdoorsy type stuff. Go check out Paul's channel. Smash that subscribe button on him. Chart. $92 per contract. 20 might. I might be able to jump in. So it really comes down to: do I want to? Would I enter in? I usually don't enter in uncovered calls that far out. I usually like to, for one Friday, on Friday, I like to get covered calls for the following Friday. I don't like to go any longer than that because a lot can happen in that time period. Oh yeah, you're welcome, Paul. No problem at all. What I think I might do. So depending upon how tomorrow goes, I might. Super risky. I might do 20% on covered calls at the $20 strike price expiring this week for a rapid capture, and do a second set at the same time. I would have to see where it's at premium wise for either 19 or 20, and do 20% there. Huge risk, but if we get a little bit of a run up, that could be a huge payout though. And I think on the ones for next week, because end of week volatility and opening volatility on Monday, because Mondays you always have the chance of additional volatility, additional huge price swings. So much can happen on the weekend that you can't account for. That's why loading your covered calls on Friday for the following Friday is dangerous. That's usually I'll wait till Monday morning. But depending upon how volatility gets built in, do 20% for this Friday and 20% for next Friday. Only thing is that the potential for a first day stop loss trigger could be like super high. So I would almost have to not set a stop loss on next week's and babysit them. Kind of watch and get just like how I did the early exit on early exit this Monday. I might just have to not break one of my rules. You notice I do break some of my. They're not rules; they're more like guidelines. But you notice that there are times I push my guidelines because the risk. The risk is the potential to make money. Bigger the risk, bigger the reward. Yeah, that is exactly what Tariq Al Musa says. Yeah, I will channel my inner Tariq Al Musa. If you know who that is, definitely props to you. So yeah, Yeah, 20% on one week, 20% the next week. I've got to see the premium though. The premium has to, because right now I'm not sure how good 76 per contract is looking 9 days out. That is if it was over 100, yeah, it would be easy to make that call. Or I could just, I could go super aggressive. Go a full 40. Do the 40% again. Do 40% 3 times in a 1 week period. But see, the thing was, the initial ones that I did Friday of last week, those were at the 1850 strike price. The ones I did on Monday, was that Monday or was it? No, the ones I did yesterday on Tuesday. Those I attacked the $20 strike price because the 16,000 contracts. That is a, when you look at the other strike prices around, that is a huge battleground. Granted, the 19 is a big battleground too. Either one of these come Friday is going to, that's where the line in the sand is going to be drawn as far as options go. But, I like playing options at a strike price that has 5 digits. Anything above 10,000 contracts, that is where I like to play. That's where I draw my line. That's where I like to battle at. Or one strike above to have that buffer. They've been battling so hard though. I think I can go right at the target. And when you look at it, looking at the price differences, $8. What's that? Yeah, $8 per contract more. But be careful because sometimes your wishes come true. Yep, that is definitely true. What I do like is the delta on these, especially on the $20. Delta is at $20. So all it would take is from where it closed out now, if it dropped down to 17.50, it would essentially turn this into $2 to $3 worth of value depending upon how long it took to get there, and I could do an early closeout. This is what makes options both exciting and terrifying at the same time. Is the fact that when you understand what the numbers mean, you understand how right and how wrong things can go on you. On the flip side, though, so yeah, Paul, we were talking about the wheel before. Now, so if you're going to play the wheel on AMC, as horrible because you don't like, nobody wants to lose their AMC shares. No one wants to sell them back to the hedge funds. But essentially, you sell them on, you sell a covered call at the $20 strike price, get $24 premium. Now we're going to extrapolate some numbers. And I'll extrapolate the numbers with y'all. So you get assigned on Friday. You get assigned. You lose your share. So you end up deciding the next week you're going to enter not bull put, cash secured puts. So differential between theta and delta. Gamma up for $1.50, running through the numbers. So if it ran up to where you got assigned on Friday, looking at the decay numbers, you would be able to enter cash secured puts using $1,800 as collateral. You would collect approximately $70 to $75 for entering that cash secured put with an $18 strike price. So that just means you're tying up $1,800, and at the end of next week, if it closes above $18, you get your collateral released. If it goes below, then you're buying 100 shares at $18 a share. That's your $1,800, but you're still collecting that $70 to $75 of premium, which you could immediately turn around and use it to buy three and a half shares, roughly. And that 70 to 75, that's rough numbers, looking at the fact that in order for assignment, you would have to be over $20 a share. So looking at the differential in prices between the delta, subtract your gamma, and add in your theta to your value, is 105 now. So take off the days for the theta and the difference between the gamma and delta movement. And if you're doing the same price, that's how much roughly it would come down to. Maybe closer to 65. So yeah, that's if you were going to run the wheel. And the wheel, you just keep doing covered calls till you get assigned, and then you keep doing cash secured puts. But with AMC, it's almost that if I got assigned, I wouldn't be doing. I don't think I would actually do the cash secured puts. I'd rather be looking for an entry below 20 to enter back in manually. Yeah, too scared to mess with AMC. Yeah, that is why I'm always talking about having that stop loss, because I don't want to lose my shares. That's the thing. I don't want my shares going anywhere. They're my shares, and I want to hold them. Granted, when it hits life-changing money, it would be hard to not sell them, but I would really like it to immediately run up to $1,748.81. I would love for it to immediately run up there. I can be like, oh, that's my price. Sell them all and walk away from it. But on the other side, bull put spreads. Because y'all know me, I love my bull put spreads. Looking at the price actions lately, I don't think the 1650 is quite safe enough on the low end. So giving up 30% profit, or 33% profit basically, for another 50 cent of protection. And see, you don't have to go right off the 8. I use the mid as a way to kind of gauge where everyone's at. Because I know it's the middle point. I know a lot of times your fill is going to be right around that point anyway. So yeah, if you look at it, on the low it's 4, on the high it's 12. Well, if people are trading it at 8, then the people at 4 and 12, that they're not in the game. Yeah, and see, that is the dangerous part, Paul. Only having 100 shares, that is one covered call contract, and that is your entire position. And that is your super, super risky point right there. So yeah, definitely when it comes to covered calls, 100 shares, just having 100, that is not in my opinion, not financial advice, that is not the position to be playing with your shares right there, because the risk of assignment is real. And I guarantee you enter into a covered call, and as soon as you enter the covered call and the price starts to run up and you see the amount that you have to pay to exit that position keep climbing. Now, if it's only like, if it's only $30, $40 and you realize, oh wow, I just, all of a sudden it's going to cost me $80 to close out. Well, that's doubling the premium. But when you get to the point where you collected $50 worth of premium and now the price for you to exit and get your shares freed up is $500. Yeah, just gonna sit on them. Yeah, that's why I've got part of my position that I do not play with. That is, why I say, most times I'm only risking, 25% of my position. I've gotten riskier lately just because I feel something's coming soon. I don't know when, but it feels like we're getting towards the end game at some point, and I'm getting aggressive because I want to try to increase my share count. Because every so often I run through and I calculate out what life-changing money is for me. And the more shares I have, the smaller that number gets. The smaller it gets to where if I exit here, I'm good with it. I would, of course, love to get more. But, yep. Yeah, so I'm going to go ahead and wrap it up for the evening. Just kind of wanted to get in, have a look. I mainly wanted to see, that position that I exited. I wanted to see how that's playing out. Like I said, I'm going to be interested to see come Friday, hour before market close when this position locks, it would have told me what was going to happen. The fact is, at that point, I couldn't get out anymore. Hoping to get 1 Bitcoin from the MOAS. I'll put my money from AMC into Bitcoin. I don't know if I... You do you, Paul, definitely, but... Is that just from the profits that you're hoping to get a Bitcoin out of the profits from it after? Because for me, I look at paying off everything. Wiping the slate clean, everything's done. If I still had to work, the thing is, I wouldn't have everything be paid off. And from that point, every bit extra goes into my investment portfolio and gives me a good nest egg on getting those dividends. But yeah, I hope it works out for all of us. But yeah, I'm going to go ahead and wrap it up for the evening. So I want to thank everyone who stopped by. We had Paul, Cassie, Trapper, DD214. Riptide was in here, and I believe that I'm scrolling through and having a look. I believe that was everyone. But thank you, everyone, for stopping by and spending a bit of your evening. I like the midday streams because I like being on here and seeing the price moving and talking about it with everyone. I do like the aftermarket because if there's any teaching to be done, it's easier to teach when the share price isn't bouncing from 1801 to 1799 and it keeps moving the option position. So it's easier teaching after hours, but it's funner doing it live, when the market's live and open. But thank you, everyone, for coming by. I appreciate it. Smash the like button if you know anyone interested. Let people know about the channel. Don't be afraid to share it on social media, Facebook, Twitter, and all the such. And I will catch all of y'all tomorrow, and I wish you good health and good trades.